Hello everyone and welcome to the YouTube channel of BeingACCA. This is Toshita Gupta, ACCA affiliate, and in this video we are going to be solving Section A questions from Financial Management Environment topic. Let's get started. So the first question says which of the following is or are among the elements of your fiscal policy. So always remember that your fiscal policy will always talk about the government revenue and the government expenditure. So, government revenue is basically in the form of taxes, and government expenditure is something that the government is spending in the economy, maybe in the form of building highways, giving loans, and everything, right? Then, your monetary policy is another thing that will talk about money supply, interest rates, inflation rates, and everything. So in this we are asked about fiscal policy. So with respect to that, government's action to raise or lower taxes again will fall a part of fiscal policy. Then money supply will go under your monetary policy. Then government actions to raise or lower the amount it spends, so expenditure will talk about the fiscal policy. Your answer is 1 and 3, which is option B. Moving on, which two of the following statements are correct? Securitization is the conversion of illiquid assets into marketable securities. Yes, this is the definition of securitization. Reverse yield gap refers to equity yields being higher than debt yields. So this is wrong because actually the reverse yield gap is where the yield on your debt is greater than the yield that you get on your equities. So this is wrong. Third statement says disintermediation arises where borrowers deal directly with lending individuals. Definitely, this is true because intermediaries are those people who are in between lenders and borrowers. So, disintermediation will be the opposite. They will be dealing directly and there will be no mediators involved. So, last is demand pull inflation will occur when there are increases in production costs independent to the state of demand. This is wrong because this describes actually your cost push inflation. Then indicate which of the following statements are true or false. Coupon bearing securities have a fixed maturity and a specified rate of interest. This statement is actually very true. In the discount market, funds are raised by issuing bills at a discount to their eventual redemption or their maturity value. Again, this is true because when you are issuing your bill at a discount, it will be redeemed at the original value. Let's suppose it's a treasury bill which is priced at 100 rupees, and then because it does not carry any interest, it will be sold at 95, and then on redemption you will get the entire 100 back to you. Then principal objectives of macroeconomic policy include which of the following? So full employment of resources, definitely yes. When you talk about an economy, you try to maximize the resources completely. Price stability, yes, again one of the objectives. Economic growth, definitely yes. And then balancing the government budget, this is not really a principal objective. This is something that they do try, but this is not a principal objective. That is why your answer is option C. Governments have a number of economic targets as a part of their fiscal policy. So we have to tell two actions that relate to fiscal policy. Now, again, remember, fiscal will always talk about government expenditure and government revenue, taxes and their money that they are spending. So, decreasing interest rates, no, this will be monetary. Reducing taxation, definitely yes. This is a part of fiscal. Using official foreign currency reserves to buy domestic currency, again, no monetary policy. Borrowing money from the capital markets and spending it on public works. So, again, it's government expenditure, that is why it forms a part of fiscal policy. Regulating forex rates, again, this is a part of your monetary policy. Then let's talk about which three of the following are key roles played by your money markets. So, money markets will definitely be providing short term liquidity. Then they do provide short term trade finance as well, and allowing an organization to manage its exposure to foreign currency risk and interest rate risk. Yes, this is something, the money markets are used by people to hedge their foreign currency and interest rate risks. Dealing in long term is something that they do not do, and shares are also not issued in money markets. Which of the following are your money market instruments? So basically, you have to pick which all are the traded instruments in money markets. So certificate of deposit, yes, definitely is traded. Then we have corporate bonds. So corporate bonds are long term, that is why they are not in the money market. Commercial paper, yes. And then treasury bill also yes. That makes option C your answer. Moving on. Which three of the following are common roles of the treasury function within a firm? So they will definitely be involved in short term management of resources, then again, long term management of resources. Long term maximization of shareholder wealth, yes. Then maximization of market share is not something that the treasury function will look at. Then risk management, definitely yes. They are responsible that, they take care of all the risks by hedging for them, right? Then accounts receivable and financial reporting, again, not something that the treasury function deals with. Then, which of the following is the difference between primary and secondary capital markets? So, primary capital markets relate to the sale of new securities, and secondary relates to securities when they are traded after the initial offering. This is very true. That's why we have A as our answer. Then, both primary and secondary markets relate to where securities are trading after initial offering. No. After initial offering is your secondary market, and new securities is done in your primary market. So that's why C is also wrong. And D says primary markets are where stocks trade and secondary markets are where loan notes trade. Again, this is a rubbish definition. Then changes in monetary policy will influence which of the following factors? So monetary policy, always remember, we'll talk about your exchange rates, we'll talk about inflation rates, right? Foreign exchange and everything. So let's have a look at the options. Level of exchange rates, yes. Cost of finance, again, is the interest rates in your economy. Level of consumer demand, again, yes. And then the level of inflation, definitely yes. So we have our option as D. Which of the following is or are usually seen as forms of market failure where regulation may be a solution? So we have imperfect competition. Yes, we have to have a regulation over there. Social costs or externalities. Again, we need regulation. Then suppliers agree between themselves to set minimum sales price. Again, in this scenario, we will have to have a regulation because this will lead to a market failure. So with this, we have option D as our answer. Moving on. There are two main types of financial markets: capital markets and money markets. And within each, we have primary and secondary markets. So we have to tell two statements which are true. Primary markets allow the realization of investments before maturity date by selling them to the investors. No. Primary markets deal in new issues of loanable funds. Definitely yes. Capital markets consist of stock markets for shares and loans. This is also true. Money market provide long term. No, money market will always be for short term. That is why B and C are your answer. Now we have to tell true or false again. Interest rate smoothing is the policy of some central banks to move official interest rates in a sequence of relatively small steps in the same direction rather than waiting until making a single larger step. So, have a look at the word itself: smoothing. Smoothing is something you do not have to take a big jump directly, you do it in small portions so that it smoothens out and nobody has to bear the brunt at once. So, this statement is true. If governments wish to influence the amount of money held in the economy or the demand for credit, they may attempt to influence the level of interest rates. Again, definitely yes, because if the government wants that people have lesser money, they will increase the interest rates. So that will discourage people from taking loans, and that is how they will be having lesser money in their hands. So now we move on to question 35. A variety of corporate governance rules have been introduced in different countries, but what are the principles common to all that they typically include? So we have to talk about. Corporate governance over here. Let's have a look at the statements. The chairperson and chief executive officer should not be the same individual. Yes, this is something which is universally applicable. Non executive directors on the board should prevent the board from being dominated by the executive directors. Definitely, yes. The audit committee should solely consist of executive directors. This is false. Audit committee would rather consist of non-executive directors. A remuneration committee should be established to decide on the remuneration of the executive directors. This is also true. So we have option C as our answer over here. Which of the following statements is correct? Direct taxes are levied on one set of individuals or organization but may be partly or wholly passed on to others and are largely related to consumption, not income. So, first, let's understand direct taxes are always, charged on one person, and they are paid also by the same person, whereas indirect tax, so example of direct tax is something, you can say income tax, right? So it is levied on you and it is paid also by you. When we talk about indirect taxes, these are something which, it is actually paid by someone else, but it is deposited to the government by someone else. So you can see, as an example of indirect taxes, as maybe like a VAT, a value added tax, or a GST, which is goods and services tax. So basically, if you are buying, let's say, a packet of biscuit, so you are paying GST or VAT over it. So you are the one who's bearing the tax, but it is actually the seller who will be depositing the tax on your behalf to the government. So that is why statement A is wrong, because it states that it may be partly or wholly passed on to others. Direct tax can never be passed on to others. Indirect tax are directly levied on the income receivers, whether they are individuals or organizations. Now, this is also false. A balanced budget occurs when total expenditure is matched by the total taxation. This is true because budget basically, what is the government's budget? They have a debit and credit side. So on one side they have their expenditures and on one side they have their income. Their income is nothing but taxes. So if their expenditure is equal to taxes, that means they have a balance. And if they have maybe the expenditure is less and they are earning more, then they will be in a surplus. And if their expenditure is more than what they are earning, so that means they are in a deficit. That is why statement D is also wrong. Again, true or false has to be picked over here. Demand pull inflation might occur when excess aggregate monetary demand in the economy and hence demand for particular goods and services enable companies to raise prices and expand profit margins. This is true. Cost push inflation will occur when there are increases in the production cost independent of the state of demand. That means, the prices of your raw materials are only rising. So that will lead you to a cost push inflation. It is something that your costs are increasing, your raw material costs are increasing, which is why you are unable to, there's excessive prices in the economy, inflation is there in the economy. Moving on, which three of the following are true in relation to certificates of deposit? So let's read the statements. They are evidence of a deposit with an issuing bank. Definitely, yes, this is true. They are not negotiable and therefore unattractive as they do not ensure constant liquidity. This is actually wrong. They are fully negotiable and they are very liquid in nature. They can be traded on the markets. They provide the bank with a deposit for a fixed period at a fixed rate of interest. This is true. They are coupon bearing securities. Yes, certificates of deposit will give you interest. Then they are not tradable. This is again false. Which of the following is least likely to be a reason for seeking a stock market listing? So basically, you will go over there to, have a like significant loss of control to a wider circle of investors. So basically, what happens is that we do not want to. We do need more funds, but we do not want to, make sure that it is those people who are currently owning the business that they will retain their holding. So we have to select a reason which is least likely. So when we go for a listing, definitely the company's image will be better. We will have a transfer of capital again, because we are going for a listing, different people are going to be buying our shares, and we also have a access to a wider pool of finance. We need money, that is why we're going to the stock market. So improving existing owners control over the business is something which will least likely happen, because rather than remaining with the same people, the earnings will be sorry the ownership will be diluted. Now more number of people will be involved in the day to day business, right? They will be also included in the decision making, because these are going to be the new owners, or maybe some portion of the equity is going to be distributed on the stock market. So there will be a dilution in the ownership, right? So which of the following is not typically a principal objective of macroeconomic policy? So, to achieve full employment is an objective, economic growth is an objective, appropriate distribution of income and wealth is again an objective. So, uh, deficit is something that they are not aiming at, right? Which three of the following are advantages of having a centralized treasury department in a large international group of companies? So, no need for treasury skills to be duplicated throughout the group. Definitely, when you have a centralized department, you do not need to have these skills in different people throughout your group. Necessary borrowings can be arranged in bulk at keener interest rates than for smaller amounts. Definitely, when you are dealing in a large amount of funds, you will be getting lesser interest rates. Then the third statement says the group's foreign currency risk can be managed more effectively since they can appreciate the total exposure situation. Again, this is true. So we are here with the three statements which are definitely the advantages of having a centralized treasury department. So let's move at the 42nd question. Investing in a smaller medium sized business is inherently more risky than investing in a large company due to lack of business history and lower level of public scrutiny over accounts and records. What is the frequently used term? So you would have always, read in your book also that this is the funding gap. So basically, this refers to the fact that when SMEs want to expand beyond their available funds, but they are not yet ready for a listing. So that is why they face this problem, and this is called a funding gap. Now we have to tick which financial instruments will be traded where. Commercial paper definitely will be trading on a money market. Convertible loan notes can be traded on a stock market. Then you have your treasury bills. Again, this is a money market instrument. And then certificates of deposit also on your money market. Which of the following government actions would lead to an increase in the aggregate demand? So we have to tell that what will increase the demand. So always remember that to increase your demand, you either decrease the tax rates or you increase the expenditure. That will, definitely help in putting more money in the hands of people, and they will definitely buy more in the economy. They will demand more in the economy. So basically, what you would do over here is that you decrease the tax and increase the government expenditure. And also, one more thing that you can do is decrease your interest rates. This will enable people to borrow more, and if they have more money in their hands, they will demand eventually more. So, option 2 and 4 is your answer. Moving on, which two of the following activities are carried out by a financial intermediary? So, intermediaries will usually be responsible for transforming your maturity, and they will also transform your risk. Then, a prospective merger would need to result in a company having a market share greater than 80% before it can be described as a monopoly. Now, this is false. A government may intervene to weaken its currency's exchange rate in order to eliminate a BOP deficit. Now, this is true. There are governments that have had to do this because they want to eliminate the BOP deficit. Then, a relatively high rate of domestic inflation will lead to a strengthening currency. Definitely not. It's actually the opposite. If you have lower inflation, that means you will have a stronger currency. Then government fiscal policy involves managing interest rates. This is false. As I just told you, I've been telling you multiple times. Fiscal policy will always be about government expenditure and government revenue, and monetary policy will be about interest rates, inflation rates, forex, etc. Then, which of the following relates to money market instruments is or are correct? Discounted instruments do not pay coupon interest. So, yes, this statement is correct because it is the discount which is your return. You will be getting the entire money back at the end of the period. Commercial paper is secured on the assets of the issuing company. This is wrong. Commercial paper is actually an unsecured instrument. So, A is your answer. A listed company is to enter into a sale and repurchase agreement on the money market. The company has agreed to sell $10 million of treasury bills for 9.6 and will buy them back in 50 days time for 9.65. So we have to calculate over here what is the implicit annual interest rate in this transaction. So what we'll do over here is, first of all, we need to find out how much is the difference. We are selling it for 9.6 and we will buy it back at 9.65. So basically the difference that we see is 9.65 minus 9.6, which will come out to be as 0.05 million dollars. So this is actually the increase in the value. Then if you take out a percentage, you divide that by the original figure. The original figure is 9.6 9.6 million. So if you take out a percentage, it will be 0.52%. So 0.52% is something that it is the increase in the value. Now this is something that we have done over 50 days. And if you see in the requirement over here, we have to find out the annual interest rate, right? So what we have to do over here is we have to annualize this value. So to annualize this is something that we have done for 50 days, and I want this for entire 365 days. So I will put it to 365, and then if I just work this out on my calculator, this will come out to be 3.86%, and this will be my final answer over here. Moving on, which of the following statements relating to disintermediation is or are correct? Disintermediation allows the investors to conduct transactions directly but at increased risk when compared to the use of intermediaries. Now, this statement is definitely correct. It requires the use of cryptocurrencies. This definitely does not have to be true. So, that is why option A is your answer. Moving on, which of the following statements relate to security token offerings is or are correct? Value of STOs comes from being tied to assets with a real monetary value. This is correct. STO transactions are recorded on a blockchain ledger. Yes. So this basically talks about your bitcoins and everything, the cryptocurrencies. Moving on. A large listed company is to issue 90-day commercial paper with a nominal value of $10 million. Now, each paper will have a nominal value of $100,000. Annual required rate of return is 4%, and there are 365 days in a year. We have to calculate the issue price basically. So, first of all, we will see how much the return should be. So, the annual return that we want is 4%, and 4% is annual, so we want it for 90 days. 90 days the issue time. So, I will multiply this by 90 and then multiply this by 365 also, because the total number of days are 365. So with this I will find out how much is going to be my return. So if I just work this out, it will be 0.009863. So this is going to be my annual return. So my issue price will be something which is 1 plus this return. So 1 plus the return that we just found out over here. This should be issue price multiplied by this should be equal to $100,000. So I can say that issue price will be equal to $100,000 divided by this figure, right? So I can say that this will be 100,000 divided by 1.009863. So if you work this out, it will come out to be 99,023, and this will be your issue price. Moving on to the next one. I think this is the last question. Yes. Which four of the following descriptions relate to main macroeconomic policy objectives? So, ensuring minimum amounts of price increases. Yes, this is inflation. We want to keep this to a minimum. Increasing national income and living standards. Again, something which is our objective. Ensuring a balanced ratio of imports and exports. Yes, we do want that so that we are in a BOP balanced position. Then maintaining interest rates at minimum levels. No, this is not the objective. Balancing government spending with tax receipts. No. Ensuring a stable and fully employed labor force. Yes, because the resources in the economy are scarce and we want that the resources are fully optimally utilized. With this, we have come to an end to this topic, and in the next one, we will be solving working capital management. Thank you so much for watching. I hope that this was useful.